final speaker for the day, Marco Toja of CU Box. He's going to be talking about the issue of data versus smart data. And those of you who were here at the beginning of the day might remember that, that pyramid of analytics where we spoke in terms of descriptive and then prescriptive and then cognitive. And many organizations are still in that descriptive situation. How do I measure what's happening within my company? But often many of them don't actually look outside their own company and benchmark where they are in the overall context of their business. So lack of context creates chaos. Over to you, Marco. Thank you.
Thank you. Swapping slides.
On the table.
Here on the table. Thanks. So, I cannot stand still, so I gotta find a place where I'm not gonna fall. Listen, I could spend the next 20 minutes just to annoy you about the company and what we do, which is great and fantastic, and every one of you will be falling in love by the end of it. Instead, this time I changed approach. What I'd like to tell you is why did we create this kind of company and what kind of evolution we saw in the last 2 years, 3 years, that has brought what we first thought to be a reality and a real strong reality. We heard a lot about changes, we will do whatever. We have 7 real business cases, more than 2 billion hours collected data on operation which were done in conjunction with insurance companies. So we are one company within an ecosystem of high-tech and tech technologies. So maybe, let's say why. Well, at the very first beginning, somebody said, it's very difficult to make something simple. And the whole thing is going toward complexity. You want to go simple, and then you either are a genius or you are a little crazy. I think we belong to the second part, so the little crazy kind of company. But that was the core. Remember, this word simple. It's going to come up many times. That is all what it is if you really want to make the difference. Why is that? Because today you find yourself in an extremely interesting digitalized world. And yeah, we have an amazing number of sensors over there, hundreds of millions. We have a very uncorrelated and unstructured data, hundreds. I just heard a colleague of mine speaking about 8 months before they got clean data out of a source. And that's amazing. Let's not talk about algorithms of artificial intelligence. I think I can count 2,000 new algorithms deposited just in the last 2 months over the world. You want to work into that? That is extremely complicated. Are we really making something good, or we are killing? Or this all IoT technology and insurance is a killer, because complexity has killed a lot of companies. But then something happened. There was a publication at the beginning of this year, a very interesting one. It was called the Millennials Index, which some people might realize, some people might not. Millennials are the next workforce of this planet. Today, they run 20 out of the first 40 Fortune 500 companies. So they're already half through it. And what happens there? We all spoke about products, new products, use of technology. Let's make this new product and the clients will buy it and everything else. Does anybody knows how long did it take to a social event to kill 2 banks and one of the biggest telco company in the planet? 2 weeks. And a company such as Nokia was gone out of a full social event. We are doing a similar thing today to another big company. What happens? I like to quote the chief behavioral officer of Lemonade. How many people have a chief behavioral officer in their company that looks to outside, not inside? Not internal behavior, outside behavior. When he says, if somebody would like to think about the worst, take the worst out of humans, it would be insurance today. Yeah. That's not too bad as an idea, considering that the millennials in this have just said that going to a bank or going to a dentist, they'd rather go to the dentist. Why? They have no passion in going to a bank, and they don't see a difference between one product and the other, so why bothering? It's fully commoditized. They would rather buy an electronic wallet and bring it in their pockets than having $2 million in a bank. That's another thing they said. And after the bank, they named the insurances. Exactly the same day. So we can all deny, we can all think about products and all these kind of things. At the end of the day, this is the most disruptive, violent kind of wave that can hit this industry. So either we change that way or we don't. And then we are kind of problems. So everyone runs to technology. As technology is the solution, it's always the technology solution. Of course, it's always been in the past. We saw so many companies thinking technology was a solution. They're called Kodak, Polaroid, and others, but that's fine. And then we forget one of the things that was most simple to remember. The Mavericks paradox, a paradox. What is easy for humans is difficult for machine, and vice versa. So what are we going to do with all this data, all these sensors, all this new technology we have? Well, we're just going to suicide ourselves. We're going to choke ourselves in it. As the biggest paradox has never been false, ever, in history. It's one of the few things that comes back on a cycle and kills. The 3 laws of the paradox that needs to be respected. There are 3 laws not to fall into this. First, fewer, more relevant data. What I used to call smart data. And what is a smart data? Fewer data can be transferred across industry. It can identify simple self-learning capability. Don't have to run 100. We don't have to have 2,000 new algorithms in the last 2 months. It doesn't fly. Self-learning algorithms. Unless we do that, our technology is going to kill us. So I finished this introduction, which after all wants just to say either we find a way to change, but not maybe the way we have in mind. I'm proposing a new way. We all speak about different ways, but I think there's a new way, a way that involves emotions and is connected to behavior. That is the way we have to get to. But how do we get to that? Well, I think loss-centric insurance is pretty much the common terms, whatever we want to admit it or not. That is where we are, that's the way we are paid, that's the way the bonus are, that is the way the structure is. And it's fine. It makes insurance a standalone player and a solid one financially till today. Nobody can argue about it. It's really worked. Then a lot of people said, okay, let's move to predictive. Let's use data for predictive. Oh, yeah, I think Clinton is so happy about predictions. Prediction is just one step. You move to a black box to a white box. You make 2-3 calculations which integrate statistics with some real data, and then you believe you have prediction. That's not true. Humans are not predictable, and I think whoever kids knows that. And even if they were predictable, human is just one small part of the planet. The other things, are objects. That is where CEO Box is focused, not on humans, on boxes. And prediction of behavior are still different things. So you have to move to the 3rd level. And the 3rd level is behavioral-centric. Behavioral-centric is basically a place where you crossbreed across influence, across industries, across elements. You find the common threads, and insurance becomes a part of the daily life. It becomes an accepted part of that behavioral change which is being so much enforced by all the new generations. So that is where we are today. So that is where CEO Box comes in. Now we're talking about the company moment. Where CEO Box comes in is exactly in doing that. But we did decide that what we wanted was focus on things, on objects, because somehow they're more predictable, and somehow we have less information about it. So it took 40 years for the insurance to understand it wasn't the car having an accident, but it was the guy driving the car. Fine. I wonder how long it was going to take it is to understand it's not the container which is destroying the wine, but it's the wine which is getting destroyed inside the container. That's the whole story about CEO Box. Use what is called real-time monitoring systems, coupled with an enormous quantity of mathematical algorithms that can go from understanding temperature to understanding repetitive patterns to literally build behavioral patterns for objects which are traveling across the world. I make myself more simple, more clear. If you have a container filled up with banana, and you are looking for how these bananas are moving across, what do you really have there? Nothing. The banana was first on the tree, then in a warehouse, then after that was manufactured, then was moved in a boat, then was maybe transported on a plane, then was taken in another distribution area, and then ultimately came up on your retailer. How much do you really care what was the part which spent into the container? Nothing. There's a flow of data that goes from A to Z, and you have to have a system that first of all differentiates between a painting from Michelangelo and a banana from Raffaello, banana from, banana from Costa Rica, and then it's capable to understand that there's a way data are flowing and automatically adjusts to the intermodal system. And so whenever it's either in manufacturing or in a warehouse or on a boat or on a plane, it understands because things are different. When you have a Michelangelo and it's down in a safe, we can see that it's in the dark, having a light sensor that tells you something is really worth is zero. As much as worth is zero to have a light sensor which is out in their position. But when it's transported, that light sensor will tell you that somebody is opening the box where you're keeping the Michelangelo. But somebody has to understand. So we heard about ecosystem a lot. And I'm using it only once in this presentation if I can. At the end of the day, we are moving from a paradox to a paradigm here. So we are literally trying to build an ecosystem for interconnected things. And there is no way insurance company can manage technology. I'm sorry, I've been very blind here. No way. It's too complicated. And there's no way technology company can ever become insurances. There's no way out. It's an ecosystem that has to be built on specific kind of routes, a specific kind of goal. One goal, get the behavior. Use the technology and use the knowledge from both sides to get to that. Otherwise, we get lost in the middle time, and data are a continuous flow. You don't need to stop them. If you stop them, you lose track of what's happening. And that is the big difference. Everybody speaks about black boxes. How many have heard telematics and black boxes? Black boxes are the death of what is called combined ratio. And a lot of people here working in an insurance company know what a combined ratio is. Oh, guess what? I have to lower the premiums to get the black box on the car. And then all of a sudden, I might be able to reduce slightly my expenses in processing the claim. But at the end of the day, United States, black box adoption, we went from 94% to 108% in combined ratio. Anybody that knows that means? It means there was a loss. Italy, same thing. So what do we have to do? We have to change our mindset. We have to work on process transparency. Reiteration, but not reiteration of millions of data. Something has to trim the data down, has to link that to the context at the very beginning. That's what CEO Box does. It takes this data, it creates a context around it. It's on a plane, it's not on a plane, it's being manufactured, it's not being manufactured, it's moving from A to Z, is it out of time? It creates that, it moves that on our artificial intelligence algorithms, and automatically changes the sensors which are placed on the device or on the banana or changes the configuration of those sensors in real time so that you only get smart data to analyze. And when you reiterate smart data over smart data over smart data on a transparent process, then you finally get the behavior, and you really nail down the behavior. Believe me, we'll see that in a few times. You nail down the behavior. Has to be true. So I'm not going to get into this. Doesn't work in one day to the other. The adoption to a technology has to be true, has to go through millions and millions of hours. We have people speak about our data point. We said 2 million hours over 2 years and plus of tracking with devices, telecommunication, and everything. We'll see how we do that. We have 3 partnerships with 3 different insurance companies working on different projects because nevertheless the business model is still not the most defined, and then we see why. But at the end, the results are coming. And we have 3 rules for those devices, for those results. 3 single rules. First, pick the fight. So, pragmatic, parametric products. If you want to use technology, be pragmatic. Don't try to make immediately your Nespresso machine with everything included. It's not going to work. Have to start analyzing things bottom up. Very simple. We don't have enough real data. We have a lot of statistical, but not real. Second, optimize the combined ratio. For anybody that understands this, it makes make money for everybody. Makes money for you as insurance, make money for the user, which means you have to understand the user, and we will understand what it means making money for the user. And you have to be able to understand that your risk cannot destroy your premiums. Otherwise, you are making a loss. And, by the way, you're not going to become more acceptable from a behavioral perspective only because you are making a loss, you're taking a loss. No, you're still going to behave. Why? Because you still haven't understood what your customer wants. Otherwise, you will not be making a loss, trust me. And we will see it on real cases. The last thing is focus on end-to-end operation. If you want to use technology on objects, goods, like we do, has to be an end-to-end. A small section without the whole vision of the intermodal is going to get you lost. You're not going to have the picture. If you don't have the picture, you will never understand the behavior or whatever you're controlling. This is exactly what we do. At the end of the day, we have a gap. This gap is between the supply chain or disruption business processes and the insured losses. This gap, instead of shrinking, is becoming bigger almost every year. What does this gap mean? It means that we have a product that we know how to insure, we know the risk, and then we have these many products which we don't have a clue about how to insure, and we don't have a clue about what kind of risk they're on. And so what happens is this small area here, that we all know about it, it becomes our fighting ground. And guess what happens when you have a fighting ground on a commoditized good which goes all across the world? Well, I'll let you think about it. Normally they call it price war, and normally it don't end easy for anybody. So what you need to do is close that gap. Find how to get those new risks into the game. Check them, control them. That is where the technology is going to help you. And there are plenty. I'm not going to waste too much time about a company. We have a booth there. You stop, we tell you about everything. We get you annoyed to death. You're not going to walk away from it. But at the end of the day, there's one word we use for everything. It's simple, simple, simple. Then we do simple, secure, simple, whatever, smart, whatever. So what we do is we give to anybody a full integrated system. The system goes from a device, which is a device which belongs to us as a company, which we built it according to specific specs of time, duration, intelligence, and everything else. We give you communication worldwide. We give you the whole platform on the web or directly integrated through APIs. We have more than 120 APIs. We are by far the one with the biggest kind of set of APIs on the globe right now. We give you all this for one reason, that you take whatever it is that you want to check, and tomorrow you start. And you start by checking it across 60 different values. Each one of them can be interconnected between one another so that you absolutely know whether a banana is different from a Raffaello or a Michelangelo. But we can do both. For us, it's indifferent. It's for you, which is different. And that's the way we operate. We give you all these products together in a kind of cherry pick system that you can adapt to the different product and to the way, the trip, the traveling that product is going to do, which is going to be different for every product. Of course, if we have maintenance for industry, it's different from when we have nail to nail for art or with a farm to fork. And you are going to be surprised to know that all these are real cases. I don't even want to say the benefits for the insurance company. The insurance working with us have recognized benefit in marketing, underwriting, claims, and products. We can do them very simply. We have customer retention, amazing customer retention, because we know exactly the product and their operation. We had fantastic returns on claims. When a whole container of goods falls on a docking on a port, what are you going to do? Full loss? No, with our system, you're going to say, no, it's not a full loss. It's only those 3 boxes which got broken. And therefore, all the rest is perfect. And you don't have to send anybody there to check it. It's going to be real time. Back on your computer home, you're going to see exactly who and what and how much of a damage you're going to have it. So your claim process can go 10 times faster. Real cases. I spoke too much about fine arts. I think it's funny when people think always like, oh my God, this is only for big stuff. Oh yeah. Eggs in Australia. I was explaining before, Australia is extremely consolidated kind of business model overall the country. And therefore, all the eggs are basically moved by the same company across the whole country. Okay, so damn it, these eggs were only getting broken, always broken when they were at the supermarket. In a specific time of the year, they were always broken. So you got to change the packaging. You got to change the driver. You got to change the truck. Oh, yeah, you're desperate. 3 years later, same season, same problem. So we start tracking. So, of course, everything was insured. Truck driver, transport, time, everything else, except the fact that a specific kind of humidity and a specific temperature in the middle of Australia, the eggs were aging from inside. And when you start tracing hundreds and hundreds and hundreds of those transports and you see that the only real common thing was that temperature and that humidity, you start kind of thinking about, but maybe it's not the shock. Maybe it's not the braking or the driving. So the whole insurance coverage that never was able to get the failure had to change. Now they have a whole new system based on temperature from outside, context-based, and temperature from inside, so within the boxes, at specific kind of conditions. So with those parameters, they're able to avoid most of the eggs to break. They were breaking from inside. They were making small chickens. We have marine cargo. We do a lot of marine cargo. I don't even want to say what are we really doing, but that's the story I told you before. It's like a lot of times when you have an accident on marine cargo, it's a full loss. You have no chances. And believe me, if it's a container full of plastic toys coming from China falling into water, you don't need to make a full loss. The insurance we are working now is trying to differentiate when the container can be retrieved from when the container is not worthy to be retrieved. So when we, because of the material and the products we are looking inside, we can detect with certain safety and security that the product has been damaged. Guess what? If bottle of whiskey falls into the ocean, it gets more tasty than if it doesn't. So I don't think it's a damage to pay. On the opposite, if the crash is not that harsh, the insurance can recover, and the whiskey is going to be even more good. Is even going to be better taste than before. Yeah, good, well point. And those are real data. These are not things we are making up. This is all real. Real for machinery and equipment, remote maintenance. You produce sophisticated optical stuff. You want to have it on the other side of the world, somebody's moving it, you don't know it, you have to send a replacement part. What is more important, that you send a replacement part or that they call you telling you that your equipment of whatever kind of price is broken? You know how much is a supply chain breakdown? Massive. System like ours can immediately change that for the consumer. The insurance is not going to have any more problem in ensuring your supply chain breakdown. It's not going to be any more an unknown risk, which is going to cost you the hell. No, in this case, we can more or less avoid 90% of those. By the way, we reduced it by 70% overall globally. And the last, the agribusiness, is been our first project. I always put it in because it's the funniest one, I think, and the most ridiculous story we ever went through. This story started like 3 years. It was the very first project the company ran, and when the insurance company came to us, I was desperate. Anybody has an idea how much brand damage costs? Well, brand damage is massive. But how much does, instead, for an agribusiness company, cost losing 1 year of R&D? It basically costs the completely loss of a market share. Loss of a market share for an agribusiness totally consolidated, you'll never recover it. So it means that you have a damage of 1 year. You lose billion. No insurance company is ready to cover that because it takes 7 years to get new crops on the market. In this case, sugar beets. This company suffered this twice in their life. We start monitoring every step of the production, every step. Vernalization, which means nothing else, and put it in a nice fridge. Greenhouse, field, seeds, everything, the process. The process lasts every 3 months for 7 years in a row and going around and around and around and around. And the cleaning lady leaves the damn door of the fridge open every night between 3 and 5 when it's cleaning the fridge, and you didn't think about having a double door. And you lost 1 year, $10 billion losses. The difference between what the supply chain does, the business risk, and what is really insured is not decreasing. Don't look for everything you can do today. Use technology also to push the boundaries in those kind of risks you cannot assess, and the technology you can assess. But to do that, don't get scared don't get attracted by big data. If you get big data, you're lost. You got to trim down the data with smart and intelligence algorithm right away from the source. You got to get down to smart data. If you don't get down to smart data, you will never get that fridge. Trust me. You know how many data for 7 years, if I track every 15 minutes like I do on 60 parameters I would have had? I had to trim down. Every time the algorithm was excluding and including, excluding and including. It took us more or less 3 months to get it. So that's about it. And I hope that I'm going to see you passing by. Our booth is outside there. And I'll let you the stage for lots of questions.